Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're going to explore what makes Palantir a successful business by digging into real-world insights that you can apply to your own journey. Palantir is known for its strategic approach, much like a game of chess, where careful planning and smart moves lead to long-term success. This image of a chess game reflects the thoughtful decision-making and foresight that Palantir uses to stay ahead in a competitive market. As we go through this presentation, keep in mind how strategy, data, and execution come together to create real value and drive growth. Palantir Technology stands out as a software company with a unique and strategic focus. Since its founding in 2003, the company has specialized in high-level data integration, analytics, and AI platforms aimed at supporting critical decision-making. What makes Palantir different is its early focus on intelligence agencies, defense, and government clients, which help build a strong foundation before moving into commercial markets. Their software becomes deeply integrated into customers' operations, creating a strong dependence that makes switching costly and difficult. By 2025, Palantir had established itself as a leading enterprise AI platform, driven by the growing demand for its artificial intelligence platform and increasing adoption by US commercial customers. This analysis will look closely at their business model, strengths and weaknesses, competitive advantages, financial performance, and customer experience to understand what underpins their ongoing success. Palantir's business model focuses on selling subscription-based software platforms with high margins, designed to manage and use data at a large scale. Their main products include Gotham, Foundry, Apollo, and the newer artificial intelligence platform, which together create a complete system for data and AI-driven decision-making. Gotham is mainly used by government and defense sectors to help with intelligence analysis, investigations, and real-time operations by combining data from secure and public sources. It supports critical areas like counter-terrorism, defense, border security, and law enforcement, where security and clear explanations are crucial. Foundry, on the other hand, targets commercial clients in industries like finance, healthcare, manufacturing, energy, and logistics. It helps organizations break down data silos, create shared data frameworks, and embed analytics and AI into daily business activities, focusing more on execution than traditional reporting. The artificial intelligence platform connects advanced AI models to secure enterprise data, speeding up Palantir's adoption among companies looking to use AI without risking sensitive information exposure. Revenue comes mainly from long-term contracts and subscriptions, often starting with smaller pilot projects that grow into large multi-year agreements, creating steady income and strong customer loyalty. Palantir's key strength lies in its ability to handle problems too complex for traditional software. Its platforms are built for environments with fragmented, sensitive, and mission-critical data, which gives it a strong position in high-value areas where competitors find it difficult to operate. Another important advantage is the deep integration of Palantir's software into an organization's workflows and data systems. This integration creates high switching costs, making it costly and risky for customers to move away from Palantir's platforms, which explains their strong retention rates. The company also enjoys high gross margins, typically around 80%, because once the software is deployed, scaling comes at a low incremental cost, driving profitability as revenue grows. Leadership plays a significant role too, with CEO Alex Karp focusing on long-term strategy and customer relationships rather than short-term sales goals, building trust, especially among large enterprises and governments. Finally, Palantir holds a first-mover advantage in enterprise AI governance, addressing growing concerns around AI security, explainability, and compliance, which positions it uniquely as a trusted provider in sensitive, regulated environments. Palantir faces several challenges despite its success. One key issue is its high stock-based compensation, which often dilutes shareholders and draws investor criticism, and although profits have grown, these compensation costs remain high compared to revenue. Another challenge is the complexity of its products. While powerful, they require extensive training and organizational changes, leading to long sales cycles and limited adoption by smaller organizations that lack the resources to handle such complexity. Additionally, Palantir depends heavily on government contracts, which make up about half of its sales. This reliance brings stability, but also exposes the company to risks from political changes, budget fluctuations, and public concerns over privacy and surveillance. Finally, Palantir faces strong competition from large tech companies like Microsoft, Amazon, Snowflake, and Databricks, all of which are increasingly investing in AI-driven analytics platforms. While Palantir distinguishes itself, its competitors benefit from larger scale and greater distribution power. Palantir's key strength comes from its ontology-driven data architecture, which lets organizations map real-world entities, relationships, and processes directly into software. This approach not only supports deep data analysis, but also enables real-time operational decisions, an area where many traditional analytics tools fall short. Another important advantage is Palantir's focus on regulated and high-risk sectors like government, defense, finance, and healthcare. While many competitors emphasize ease of use and speed, Palantir prioritizes security, governance, and explainability, which makes it the preferred platform in environments where these factors are critical. Additionally, Palantir's AIP platform provides a secure way for enterprises to deploy generative AI, addressing concerns about data leakage and regulatory compliance. Lastly, Palantir benefits from strong customer lock-in and growing contract values, which help reduce churn and create lasting revenue. Once embedded in a customer's operations, the platform is more likely to expand rather than be replaced. Palantir has shown strong financial growth, with revenue reaching around 4.4% at $8 billion in 2025, which is more than a 56% increase from the previous year. This growth is largely driven by a rapid increase in US commercial customers. The company has also maintained consistent GAAP profitability, posting solid net income and operating margins in both 2024 and 2025. Their gross margins stay above 80%, which reflects the scalability of their software model. Cash flow has improved considerably as well, with free cash flow reported between $1 and $2 billion over the 2 years, providing Palantir with a healthy balance sheet and the ability to invest in research, partnerships, and potential acquisitions. Additionally, the company's Rule of 40 score, which measures a balance of growth and profitability, exceeded 90% in 2025, placing Palantir among the most efficient, high-growth software companies worldwide. Palantir's customer experience centers on close collaboration rather than just selling software. They often place engineers and experts within client teams to customize solutions that fit specific operational challenges. Although this adds complexity initially, it results in high satisfaction, especially among large mission-critical clients. Government agencies appreciate Palantir for its reliability, security, and rapid delivery of actionable intelligence. Commercial customers increasingly recognize Palantir's strength in linking AI models directly to tangible business outcomes, like optimizing supply chains, detecting fraud, and ensuring operational resilience. On the downside, some customers report lengthy implementation periods and a heavy reliance on Palantir's expertise, which supports the view that the platform works best for large organizations with ample resources. This hands-on, tailored approach can be seen in how the teams interact closely, analyzing detailed reports and data together to drive meaningful insights and decisions. Palantir's success comes from a unique approach that targets the toughest data and decision-making problems in the world. Instead of aiming for quick sales, it builds long-term partnerships and deeply integrates its technology into customer operations, which leads to high switching costs and lasting competitive advantages. While there are challenges like product complexity, a high valuation, and competition from major tech companies, Palantir's strengths, especially in highly regulated industries and in managing AI governance, outweigh these risks. Its strong financial results, growing adoption by businesses, and steady profitability all support its position as a top enterprise AI company. Rather than mass market appeal, Palantir focuses on being essential to organizations where failure is not an option. This strategy positions it well to remain a key player as AI becomes a central part of enterprise and government work. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.